Hello everyone, and thank you for joining us today. Now in today's educational presentation, I'll reveal that by adding these two simple techniques, you'll greatly improve your candlestick trading. In fact, if we look at these examples right here, I'll show you really quickly how, as looking at this chart, just by looking for a simple setup in these two simple areas, you'll be able to take advantage of moves just like this. And these techniques I'm going to be sharing with you are not only to the upside, you'll be able to see the same type of setup while you want to see markets going lower like this. So once again, welcome. My name is Steven Primo. I am the president and founder of Specialist Trading. Now, we have been giving these presentations on a weekly basis for upwards of 8 or 9 years now. And if you're new to our presentations, you'll see that we're all about educating you as traders. Our philosophy is simply to provide all of our students and members in over 110 countries around the world, in virtually every state in the United States, with sound fundamental education that has stood the test of time. Because it's our belief that the only thing that will sustain you as a trader is education, so that you can ultimately make your own trading decisions. Too many traders are relying on an outside source, either some fantastic system that's supposed to promise the world, or some trading guru that tells them on a nightly basis what to buy or sell, and they're relying on them to make their trading decisions for them. And ultimately, you know how that works, because if this were supposed to be so great, then the majority of all traders would be successful in making lots of money. But unfortunately, it's the opposite. 80% of all traders fail, and by failing, I mean you give away all of your nest egg for trading. So what I have learned in my 40 years of trading is that the only thing that sustains you is making your own decisions, and the reason why most traders don't like to do that is because they haven't been supplied with the right education. Now, I've been trading for, I said, 4 decades. I started trading on the floor of the Pacific Stock Exchange. I was a specialist on the floor for 9 years, meaning I made markets through the crash of 1987 and the bull market that followed. I've been involved in just about every trading scenario and environment you can think of. I've traded just about every system and strategy you can imagine. And so I know what works in terms of consistency, and I know what doesn't. And this is what we do at Specialist Trading. I teamed up with Pro Trader Strategies around 8 or 9 years ago. And all we do is we provide our students and members with sound fundamental education so that you can put the power back in your hands. Now, as you'll see today, I'm going to give you 2 great techniques that you can start using right away that hopefully will be able to elevate your trading to the next level for 2017. But as always, before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results. I have tons of slides in virtually just about every market and time frame you can think of today. But please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. So once again, we are required to show you this, so please take a moment to view it. And as you're looking at our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. That's our handle right there, at SPCLSTTRADG. Every day I post different information, sometimes just a little tidbits of wisdom to actual signals that our strategies have generated. So there's not a lot going on in the markets these days, but we still have some nice little bits of wisdom along the way to help you with your trading. So feel free to follow us on Twitter. All right, now as I stated, we are first and foremost an educational company. As you see here, my goal is not to simply force feed you signals or force feed you the perfect time frame to trade or force feed you what the perfect market is. We don't believe in that. In fact, we think that's a recipe for a disaster. My goal is to teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around, because believe it or not, I've made no secret about this. The first couple of years of my own trading career, I struggled tremendously. I could not make ends meet. So if any of you are going through that, I know exactly what you're going through. I went through it myself. In fact, I didn't think I was going to be trading much longer. I was lucky enough to have mentors that taught me the same things that I teach to my students. And I feel that has made all the difference. Because of what they taught me, they've been able to sustain my trading for going on 4 decades now. And this is what hopefully we'll be able to do to all of our students and members around the globe, to teach you how to trade with a specialist edge, okay? Now, since this is going to be an educational class, I ask that you please hold off on any questions to the very end of the presentation. I have, as I said earlier, a ton of slides to show you. And oftentimes, if you just wait for the next slide, your question will be answered. So if you do have a question, if you happen to come in late, please wait for the very end of the presentation to ask questions, and I promise I'll get to each and every one of them. It won't be very long, probably in the next 30-35 minutes, and then we'll go into question and answer period, okay? The only question I will answer is this being recorded? Yes, it is. We record everything. So if you are having technical difficulties or if you have to leave early, Pro Trader Strategies will provide you with the link to this presentation, all right? So once again, if you happen to come in, just kindly wait till the very end to ask any questions. All right, so why don't we begin? Now we're going to be talking about candlestick patterns, obviously, and most people like to trade the full gamut of candlesticks, and there are tons of different patterns, anywhere from engulfing patterns, haramis, to hammers, to evening stars. Now, what we're going to be talking about today is technique number 1, an often overlooked and often misused candlestick pattern, and those are the dojis. So this is what we're going to be focusing on today. This is technique number 1, just to be trading dojis, but in our unique way. Now, if you're not familiar with dojis, here is the standard definition. A doji candlestick pattern is created when the open and close price are virtually the same. Okay, now this action represents indecision on the side of both buyers and sellers. But when a doji occurs at the top or bottom of a trend, this is usually viewed as a reversal pattern. Okay, so this is the way conventional wisdom tells us to trade dojis. Now, for all intents and purposes, we're going to be a little bit lax on this, and meaning that you don't have to open exactly and close exactly at the same price. That would be fine if you did, but we'll give each other leeway of maybe 1 or 2 ticks, okay? So if you open at 50 and then close at 50.01, that's, in our consideration, the same thing, okay? It's still a doji, all right? Now, these are the most common doji patterns. All you need to know is that if you look at this standard open, high, low, close bar, which would be transferred over into very easily a candlestick, they open and close at the same portion, okay? So let's go on to technique number 2, because it's been my experience that trading dojis in their conventional way doesn't really work. In other words, how many times have you seen a stock, a future, or something in a strong downtrend, and you see a doji, all right? And so conventional wisdom tells us that, okay, that's the bottom. It's some type of reversal pattern. So now it's time to buy. And so you buy, and maybe it goes up a little bit, and then it heads lower, and now you're making new lows. Now, conversely, you can do the opposite. You can see a stock or a future or a currency pair going straight up. Obviously, it's in an uptrend. And then at the very top, you see a doji. Now, conventional wisdom, once again, traditionally would tell us that this is the top. It's an indecision pattern and a reversal pattern. So this is where you want to sell. So you sell, and perhaps it goes a little bit lower, but oftentimes you'll see that it won't even stop, and it continues higher and higher. This is where we bring in technique number 2, and this is the meat and bones of the pattern I'm going to be sharing with you today. Dojis will have a higher level of consistency if you trade them in sync with the trend. Now, this goes against everything most of you have probably already learned before. I mean, we always look at candlestick patterns, especially dojis, as reversal patterns, all right? But we're not going to look at them that way anymore. We are going to look at them as almost continuation patterns, that they're going to be continuing in the same direction as you see them in currently. So let's look at this example in Eaton Corp, all right? This is a perfect example, and you can go back and do your own research and due diligence to see if this is really true or not, but I'm almost guaranteed that you'll see the exact same thing over time. Now, obviously, someone looking at this would say, well, the stock is headed lower, all right? Now, conventional wisdom tells me I see a doji right here. If we're in a downtrend, this is telling me that we have some type of reversal. So this is actually a buy setup. So let's say you would have jumped in and purchased. Look what happens, okay? Well, then you think to yourself, boy, this didn't work. If you're lucky enough to have enough capital to hold on to the trade, well, you see here that we've kind of hit some type of a base. We have a 1, 2, 3 triple bottom, and we have a couple of more doji. So you're thinking, well, you know what? I'm going to double down because actually this is most likely the bottom, or this one right here. These are the reversal patterns. So most likely we're going to go back up. Maybe I just got in a little too early. So now you buy some more here, double up your position, and look what happens. You see, this is what I'm saying. There is no consistency in trading dojis this way. It will work every once in a while, but it will work until it doesn't work anymore. And more often than not, you give everything back that you made trading dojis the conventional way. I'm saying this from firsthand experience because that's what I was taught when I first started trading candlesticks over 30 years ago. And I was taught that they were reversal patterns, that you find them at the bottom of a downtrend, and that's where the market will usually stop, or you find them at the top of an uptrend, and that's where the market will usually stop going up. But over time, I saw that it really didn't work. You know, it would work every once in a while until, as I said earlier, it stops working. So what we want to do is add some trending tools to tell us that we are in sync with the trend, because this is how we're really going to add that level of consistency to trading dojis. Remember, technique number one is to focus only on dojis. Technique number two is to trade the dojis in sync with the current trend, not as a reversal pattern. So how do we know what the trend is? Because everyone in the world has a different idea for finding the trend. In fact, here are some of the most common tools for finding the trend. Using an indicator. A lot of people like to use a moving average per se, okay, to find out what the trend is. Some people like to use overbought, oversold oscillators or things like that. Or let's say you've even created your own indicator to tell you what the moving or to tell you what the trend is. Whereas other traders like to use patterns, all right? It's often been said that higher highs and higher lows indicate an uptrend, and lower lows and lower highs indicate a downtrend. And then lastly, a lot of traders like to use different time frames. If you see the market on a daily time frame going lower, obviously it's making lower lows, it keeps going lower, then you want to trade the hourly, let's say the hourly time frame, and you want to make sure that they're in sync with the higher time frame, okay, and vice versa if they're going upward. These are all standard, and they're, I would say, very generic and okay ways in which to determine the trend. Here's the only trouble with them, though. They're a little bit too subjective. Let's say we want to use an indicator, okay? Let's say we want to use a moving average. Well, which moving average do you use? A lot of traders like to use a 20-period exponential moving average, all right? Still, other traders like to use a 50-period moving average. I know we do at Specialist Trading. We use that as an overall trend identifier. Whereas others like to use a 200-period moving average, all right? You use a weighted moving average, exponential, simple moving average, okay? There's tons and different ways in which to discern what the trend is. Still, other traders like to use more than one moving average. They say when there's a crossover, that tells you whether the trend is going up or down. So it's too subjective. There are too many ways to determine. It's the same way with patterns. It's the same way with time frames. I guarantee if you go to other webinars, every teacher, every trader is going to have a different way to find out what the trend is. Once again, I'm saying this from first-hand experience because I've traded just about all of them in my 40 years of trading. And there's only one thing that I have found, you've heard me speak about this before, that determines the trend better than anything I know. And once again, that is the PET D. I can't stop talking about this. I use it on a daily basis, and it helps me that much. I've been using it for nearly 40 years now on a daily basis, and that's how powerful it is. I'm going to show you how by adding this as your trend identifier, you can make trading so simple using these two techniques. Now, when I first learned about the PET D some 40 years ago, it was a formula that we had to calculate by hand. But because we have high-speed computers now and programmers, we've been able to put it into a color bar tool. So all you need to know is if you have green bars, a series of green bars, the short-term trend is up. And if you have a series of red bars, the short-term trend is down. And that's it. There's nothing you have to calculate. You don't have to look at different time frames. You don't have to look at the higher to tell you what the lower is doing. You don't have to determine which moving average to use or which crossover to use, or you don't have to rely on subjective patterns. You just have to look at the color, all right? So here's how we're going to apply it. Here is our Doji buy setup using the PET D as our trend identifier. All right, we're going to look to buy one tick above a Doji pattern that is colored green. That's it, okay? So here's your standard Doji. If we see that it's colored green, well then we are going to place a buy order, or we're going to simply wait and watch once it trades one tick above. Now, you notice I said trade one tick above. Does not have to close there, all right? All we need to do and see is that intra-bar, it trades above there. Now, a lot of our students like to say, well, you know what? I want to see it trade there on the next bar, all right? Others want to say, well, you know what? I'll give it a little chance, a little chance to grow here. I'll wait 5 bars. In the end, once again, it's up to you. This is why we give you the information, and you can decide. There's no right or wrong answer. The only right or wrong answer is when you listen to an outside source tell you how to trade. Remember, I said that in the very opening. We don't believe in that concept. You have to make your own decision. So it's up to you. We supply you with this information, and you can decide if you only want to do it on the next trade or if you want to wait 5 bars. Let me show you how this works here. As we look at this chart in eBay, this older chart, we have 2 dojis as the stock is rising. Now, conventional wisdom would tell us, well, we're in an uptrend and this is where you want to sell, okay, because it's a reversal pattern. But if we add the pet D, we see that both of those dojis are colored green. We don't care what the colors of the bar were before or after. All we care about is that those bars were green. So we're going to buy basically 1 tick above. And look what happened. See, the trend will continue to go in its direction. You're just jumping on board some structure that we've put together. Now let's say you want to go short. All right, here's a sell setup. We're going to look to sell 1 tick below a doji pattern that is colored red. See how simple this is? Trading is really simple. It's just us as traders who make it more complicated than it has to be. We really get in our own way half the time. So if we get out of the way and let the market tell us what it wants to do, then it's easy. We're just jumping on board. All right, we're not doing anything different than what the market wants to do. So as we see here, here's your standard doji. Now, if it's colored red, well, then we're going to sell 1 tick below. Once again, you can either do that on the next bar, you can wait a couple of bars, it's up to you. But ultimately, you just want to make sure that that bar is red. We do not have to close below there. We just have to trade below there. So as we see here in this chart of Eaton, remember we looked at this earlier, we normally would have said, well, this is a reversal pattern. I've always been taught, you see a doji at the end, hanging man, that's a bullish sign we're going to be turning around. So if we had added the pet D in advance, we would have known that well before. 2 to 3 weeks earlier, we were already signaling that we were in a downtrend, even before we started to come much lower. The pet D is that sensitive. It is already telling us in advance that we're in a downtrend well before we started to really move down. Now at this point, we have a doji, it's colored red, that's all we need to know. So we're going to sell once we trade below, okay? That's where we're going to be going short. And as you can see, it traded on the very next bar, and look what happened, okay? So instead of buying the way we did the first time, we went with the flow, and the market went lower. Now instead of doubling up right here to buy on these dojis, we see that they're both circled and colored red. So there's no way that we are going to be buying anything. Why? Because the market, not some guy in a chat room, not some guy in TV, and not some convoluted indicator, but the market is telling us it's in a downtrend, telling us it's most likely going to be going lower. So who are we to fight that? The market is stronger than anything. So why do we want to think that we can call the bottom? It's silly. So it's much easier and much more conducive to being a consistent trader if we just go with it. So we want to sell 1 tick below, and as you can see, this is how simple trading can be if you just simply get out of your own way. All right, so let's look at some more examples how we add this when we'll look at multiple markets and multiple different time frames. All right, we look at this older chart of Yelp here. We see that we have a doji, and remember, we're giving ourselves a little leeway. All right, we don't have to open and close at the exact same price. We can open and close 1 or 2 ticks around there, and that still constitutes a doji for us. So here we have a doji, and on this particular setup, we didn't have to buy in the next bar. We just simply waited till we traded back up again, and look what happened. Now, obviously, some news came out where the stock gapped up tremendously. All right, did we know about that? Absolutely not. Did anyone call us up from the company, the CEO, and tell us, hey, tell your students to go long Yelp because it's going to be gapping up here in the next couple of days? Absolutely not. How did we know to be long? Well, all of the bars are green. Remember, the pet D is just simply translating what the market wants to do. It's not predicting. It's not telling the market. It just translates at the moment what the market wants to do. And way back here, at 28, 29, it was already translating that we're in an uptrend. So if we're in an uptrend, you're not going to sell. You're only going to be a buyer, right? And it went up. If we look here at TSS, we see here that we are in a downtrend, all right? And Conventional wisdom would say, well, this is where we buy. We have 3 dojis here. This is a clear-cut signal that we are going to be stopping. It looks like we're making a little bottom here, and we're going to probably bounce back up. That's conventional wisdom. But remember, there's no consistency in trading dojis that way, in candlesticks. So we add the pet D, and we see that, well, all 3 of these dojis are colored red. So you would have sold just below there, and if you were long, this would have definitely been a reason to get out. You would have sold right there, and the stock quickly fell down 12 points. See, it's a lot easier to trade in sync with the trend than to try and fight it. But for some reason, we're all taught to buy high, sell low. All right, and it wasn't until my mentor said, no, the real thing to do is to buy high, sell higher, sell low, and then cover lower. That's how you become a consistent trader. All right, we look here at Hershey. This was the first stock that I showed you originally. Now we're in an uptrend, obviously. We have a couple of settings here for dojis, actually a total of 4 altogether. Now, once again, traditional wisdom would say we've got to short this, right? But if we look, each and every doji is colored green. So those were our buy signals. You could have purchased here or here, and that's where you had the 23-point rise. Once again, obviously something came out to cause the stock to go up 20 points. Did we have any idea what it was? Absolutely not. We don't follow fundamental news. Remember, those are outside sources. We only look at the stock. We only look at the chart. We don't look at the earnings. We don't look at the ratios. We don't look at economic indicators because that's all too subjective. What we look at is just what the stock is telling us on the chart, because it basically tells you everything you need to know. And weeks before the stock went up 20 points or so, it was signaling through the dojis and through the pet D that it wanted to go higher. So why would we need any more information? Why would we have to pay for any more information by going to a chat room or pay for a nightly signal service? Or why would we have to, have some financial advisor tell us what to do? Remember, our goal is to put the power back in your hands so that you can make your own decisions. You can decide what you want to trade, how you want to trade it. All right, we look at H&R Block. Obviously, this is in a downtrend. It had some bad news or so and gapped down much lower. This is where traditional trading would tell us, well, you've got to buy here, right? This is a doji. It's a reversal pattern. But once you add the pet D, you see even before that gap down, the pet D was signaling a downtrend. All right? This is the beauty of the pet D because it's so finely tuned to the trend, even when it looks as if there's no trend. Looking at this, it looks as if we're going sideways, and then the stock gapped down much lower. Well, the pet D was already telling you that you're in a downtrend because all the bars were red. Now down here, the bars are still red, so you're not going to even purchase H&R Block. We don't care about that. So you would have shorted it and 8 more points to the downside. All right, we look at BIIB. All right, now here is a good reason to use the technique that we talk about where you're only going to purchase 1 or 2 ticks above, and it doesn't have to close there, but it just has to trade there. And the reason why we do that is because we want confirmation that we're going to be headed in that direction. Now, a lot of our traders, a lot of our students don't wait for that. They just see the minute they see a doji close green, they buy, or if a doji closes red, they sell. And that's okay too. There's nothing wrong with that. But in the beginning, we would say use this technique if you get a buy setup, such as this one right here, to not buy at the market while you're starting to use this technique, to just wait for it to trade above. The reason is because you need that as confirmation, because had you simply purchased at the close of that day, look what would have happened, okay? And that's why we say always wait for it to trade 1 to 2 ticks above, which it never did here. So you wouldn't have lost anything. It would have kept you out of trouble. All right, so now all of the bars are red, so okay, that's all right. We just switch sides. Now we're looking for a red doji, but we don't find one. And guess what? The pet D is signaling that the trend has changed. Now, a lot of people would say, well, this is just a snapback. It's going to make a lower low. The pet D is telling us we're going higher. And guess what? Here is a doji colored green. So we're going to buy if we trade 1 tick above. And we did on the very next bar. And look what happened, 80 points to the upside. Now, obviously, this is an expensive stock. We don't expect everyone to buy a $200 or $300 stock. But we have a lot of students and a lot of members who simply use that technique with options. They will purchase long calls or long puts or some type of spread. And however you decide, remember, it's up to you. We want you to decide. We're not going to tell you, no, 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 the only way to trade it is this way. That goes entirely against our philosophy. All right, PSA. Now, obviously, we have a doji right here. Conventional wisdom would tell us to buy. We add the pet D, and we see for the past week, the bars have been red. So we want to go short. We go short, sell right here, and 35 points to the downside. How about this example here? This is in the QQQs. Now, one of the reasons why we show you this is because a lot of students like to use this as a trend identifier for the markets. They want to have a market timing tool. So it doesn't mean that they're necessarily trading the QQQs, but if you get a buy signal in the QQQs, well, obviously stocks within that index are most likely going to be going higher. So perhaps you're interested in one of the stocks that make up the QQQs, okay? So here we see that there was a nice doji here, colored green, and the QQQs went up 6 more points. That represented, hundreds of points in the NASDAQ. You can also use it for the IWM. That's the Russell 2000 ETF. All right, we see here that we have a doji. All we have to do is add the pet D because it doesn't look as if there's a clear trend. And now we see that the trend is down. So that's our signal to go short, and 5 points, which represented hundreds of points in that index as well. And then lastly, as we see here, here's the E-mini future. All right, this is a daily chart of the E-minis. We look here, and there is a green doji circled in green. Now that's our buy setup. A lot of people say, well, gosh, I need a lot more information representing the S&P 500. I don't know if I can take this as a clear-cut buy signal, but the E-mini rose 100 points in the next 2 months. Now, if you're wondering what 100 points is, that comes out to, I believe, 700 points in the Dow. So this is how powerful this technique is. You can use it on individual stocks. You can also use it for ETFs, for indexes, just to get an idea of what the market may be doing as well. Now, if we want to look at a daily chart of the E-mini S&P, this was going back to last month in November. We can see at the very beginning of November, we had a doji. Now, is this in a downtrend or perhaps just a pullback in an uptrend? Well, all you have to do is add the pet D. And yes, the pet D is telling us you're in a downtrend. So this is a sell signal, but only if we trade below that. And as you can see, in 4 days, the E-mini went down 35 points. And that comes out to, I believe, about $250 or 250 points in the Dow. Now, those are daily charts. Let's look at a 10-minute chart because nothing changes because we've changed markets or because we changed time frames. Now, if we look at a 10-minute chart of the E-mini futures, we see here that we're kind of oscillating green, red, green, red. We have a doji right here. Should we buy that? Well, once again, this is using this technique of we're only going to buy if we trade 1 or 2 ticks above. So we never traded above. So we never went long. And prior to, or I should say after that, we had 3 dojis, but they're all colored red. So those are the ones we want to take because it looks as if we got filled on those. And in 3 hours, the E-mini fell 20 points or $1,000 per contract. So once again, that technique kept us out of buying because we never traded above, but it kept us into the short because it traded below. Here's another 10-minute chart. Now this was in November. I believe this was after the election. We see here, this is an overnight chart as well because we have a lot of members that are in Europe, all across the world, have people in China and New Zealand. So we have traders everywhere, and they like to trade off of the Globex. So here's a 10-minute chart. Now, we have a couple of dojis right here. We have 2 right here, and then we have 1 here, and then we have 1 here, and even 1 more. So actually a total of 5 dojis coming in to the day. Now, how would we have known what to do? Well, they're all marked red. The pet D was marking all of them red. So you don't have to question anything. You don't have to look at the earnings. You don't have to look at the election results. You don't have to look at anything because the market is telling you in advance what it wants to do. This is why we always tell our students, I know it takes a leap of faith, but once you let go of all these things, you'll see that trading is a lot simpler and you'll get onto that road to consistency a lot more than by simply, going to a chat room to find out what to trade, by listening to someone on TV or relying on earnings or forecasts. It's really silly to do that because, trust me, if they really were so well in telling you how to trade and how to invest, everyone would be doing fantastically, and it's actually the opposite. Learn to listen to the market, and you'll get on that road to consistency much quicker and much easier. So right here in November, the market's telling us to sell coming into the day. So had you gone short, well, you had a nice profit. And if you decided to hold on, well, you could have gotten some more with the profit you made on the earlier trades and still gotten some more. And ultimately, we see here that the market really fell out of bed. And that's 52 points in one day, or roughly $2,500 per contract. Now, we're not telling you that everyone would make 52 points because, as we stated, it's up to you how you want to trade. Some of our traders like to make 1 point and they're done for the day. Others try to squeeze as much profit as possible. We show you ways in which to do both, but how you decide which exit point to take is up to you. We're not going to tell you that this is systematic, that everyone must do the same thing. That would be silly. Now we can go to a smaller time frame. Here's a 5-minute time frame in November. Okay, as we see here, the market was going up in hindsight, but how did we know how to take advantage of that upward move? Well, we had the pet D. And if we're looking at the green bars, we just want to find a very nice doji, which was right here in the first hour of the day. And that's 8 points to the upside. Now, had we missed that first one, well, there was a second chance here to make roughly about 4 points. Okay. Once again, we're not saying you would have made 8 points, but that's how much room you had to work with. Now, as we go later on in the day, towards the afternoon hours, we see we have 2 dojis here, and they're colored red. So if you're long, and you continue to be long, that's your signal to get out. And if you're flat, well, here's an opportunity to go short because the market fell out of bed 10 points, or $500 per contract. Had you missed that, it gave you another or second chance towards the end of the day. So we've looked at daily charts. We've looked at stocks, we've looked at 5-minute charts, 10-minute charts. Let's look at the currency pairs. Here's a weekly chart of the Australian dollar. All right, now it's had a rather sharp move to the downside, but it looks to be firming up, so perhaps we're in an uptrend. Well, remember, that's the way most people trade. They say, perhaps, I think maybe we're going up, well, maybe we're going down, let's see what happens. That's not a way to trade. You want to be cut and dry. You want to have a clear idea of what the direction is. The best way to do that is to add the pet D. So what color are the majority of the bars? They're red. And we have a doji right here, which is colored red. So there's really nothing to figure out. There's no, economic news to figure out, no earnings, nothing. That just all we have to do is look and say, well, okay, we have a red doji. Happens to be in the Australian dollar, so we don't look at earnings. We look at economic news or what's going on in Australia and our dollar, and we just sell. And 1,300 pips in the next 3 or 4 months. That's about $13,000 per one contract. Now that's on a weekly time frame. Let's go to a daily time frame. All right, let's look at the British pound. Now, the British pound is just kind of slowly drifting lower, but it's in a full-fledged downtrend. And we have a doji circled in red. So what are we going to do? All we have to do is, once we see that we've traded 1 or 2 pips below that, we're going to go short. And as you can see in the next couple of weeks, 1,000 pips to the downside. It's that simple. It's not a lot of thought process into it. The only reason why trading is so hard is because most of us are trying to pick tops and bottoms. And that's difficult because from firsthand experience, I'll tell you, I never had any success doing that. It wasn't until I started to be in sync with the market. My mentors taught me to trade with the flow. In other words, try to, swim with the current at my back as opposed to swimming upstream, that I started to become consistent. And so this is what we teach all of our students, the same exact thing. Now, here's a 10-minute chart of the Japanese yen. Now, as we see, the first portion of this chart is colored red. So we look for a red doji, and there's 60 pips you had to work with, in the next half hour. That's $600 per contract. You could have gotten out at 10 pips. You could have gotten out with 50. It's up to you. Once the color's changed, you're now a buyer, and you look for a green doji, and now 70 pips to work with in your favor. We don't just stop with currency pairs or stocks or futures. Now, I personally don't trade feeder cattle, but here's a chart in feeder cattle for all you commodity traders. All right? We have a doji right here. Let's add the pet D. Well, the pet D was telling us way up here that we're in a downtrend, well before we started falling out of bed. So you see how sensitive the pet D is? It was telling us well in advance that this is in a downtrend. So all we need to look for is a doji, which is right here. And as you can see, it was 14 basis points to the downside after that. Or even crude oil. Here's a daily chart of crude oil. As you can see, the majority of the bars are red, and we have a red doji. Once crude oil on this daily chart traded below, well, you had a nice move to the downside. And then once the bars started trading green, well, you just look for a green doji, and you had a nice move to the upside. So as we get ready to go into the question and answer, I want to ask you a question, and I want you to answer this honestly. After everything you've seen today, everything I've taught you, everything about the different concepts of these two techniques, do you think these edges could have helped your trading this past year? All right. Now, I know we're coming to the end of the year. In fact, we've got like 1 or so weeks left to go. I can almost guarantee that the majority of you today, we have a rather large crowd here today in our webinar, the majority of you have not lived up to your hopes and dreams and goals of what you first promised yourself at the beginning of 2016. I can venture to say that the majority of you have not met any of those goals. And that's okay, because that's pretty much status quo. Almost everyone starts out at the beginning of the year with what they want to have the year end like. They want to make so much money, let's say a month. Perhaps they want to, put away to go on that dream vacation, or maybe have that addition to the house, or maybe have substantial second source of income coming in. And the majority of you never reach those goals. In fact, the majority of traders, I venture to say, actually do worse than they originally thought. So do you think these could have helped you? All right. Well, remember, we are an educational company. We're not trying to force feed you signals and force feed you the perfect system, telling you you just simply do this every day and you'll make millions of dollars. That's a recipe for disaster. We don't believe in any of that. We want to supply you with sound fundamental education that has stood the test of time. Well, let's recap then what we share with you today. Only buy or sell doji patterns that are in sync with the trend. And the best way I know to find out what the trend is the PET D. Now, obviously, you can still use moving averages, patterns, different time frames to find out what the trend is. But I can almost guarantee that you'll do so much better by using the PET D. That's why I only rely on the PET D to fine-tune my short-term time frame. So technique number 1 is applying the doji patterns. Technique number 2 is applying them differently than we've ever heard before, by being in sync with the trend. I strongly feel that you'll increase your odds for success with this candlestick setup tremendously. Now, points to remember. Here's what we share with you today. A great technique, a great setup, but this is not a complete strategy, because we didn't talk about advanced entry signals, okay? We just shared with you one way in which to enter. We didn't share with you other ways in which we teach in our courses. We didn't talk about where to place your stop, because I know there were a few examples that would have lost money had you stayed in them, okay? So we didn't talk about protecting your trade. We didn't talk about advanced exit signals, all right? Where would you have gotten out? Some of those trades would have made tons of money, but who's to say you would have stayed in that long, all right? It's up to you, but wouldn't you like to know all the different places you could have as an exit point? And lastly, money management. We didn't talk about that. Extremely important. These are extremely important pieces of the puzzle. I mean, how many contracts, shares should you be trading, okay? So there's a lot of things that go into being a consistent trader, not just a setup, 1 or 2 techniques that will change the way you view candlestick trading. You still need all of these things all together. These make up the piece of the puzzle. These make up the totality for being a consistent trader. Well, here's our special for all the attendees today. We're offering you a great discount as our end of year package. We're offering you the PET D, all right, where you get all the color changes for all the bars, along with our most consistent candlestick strategy. That's strategy number 5. Now, it's not what I just shared with you today. It's along the same guidelines, uses the same concept, but completely different strategy, okay? It works just with candlesticks. Now, these are great opportunities to become consistent candlestick trader. We call this our Candlestick Combo. You get instant course access, detailed instruction. We go into full detail where all the entries, all the exits, and all the stops. We provide you with a limited time with signal alerts, but remember, these signal alerts that we give you are only for educational purposes only. Now, if you do get the Candlestick Combo, though, you will be furnished with the chart signal alerts. In other words, you will get buy and sell indications on the chart. But the signal alerts we provide you with are email alerts, all right? We also provide you with the add-on that changes the colors of the bars from green to red. All right. Along with all of this is nearly 4 decades of mentoring experience where you can contact me anytime you'd like and correspond with me, and I'll answer any questions. So we don't just give this to you and say, good luck, just read the information and you're on your own. No, you're a part of our membership. You're a student of mine, and I'm trading there right alongside with you every step of the way. Now, this is a great deal to get your trading on track for 2017, our Candlestick Combo. So we're offering you a great strategy, already, great strategy that comes with all these different variables for you to decide how you want to enter, how you want to exit. Remember, it's not a system, meaning you trade the same way every time. It's just a great strategy with different variables for you to pick and choose, along with a Pet D, the best trend identifier that I know. Now, if you'd like to get lifetime access to both these courses, it would cost you close to $3,000. Here's the special, though, that we're offering today. We're giving an attendee discount for a small down payment of $14.95 and $97 per month. You can have both of these right up front, and you'll have instant course access. But in order to get that special discounted deal, you must either call or email Pro Trader Strategies. They're my sister site. They'll handle all my courses and all my promotions. You must contact them right away. Now, if you'd like to get the lifetime access where you just have one lump sum payment, that's $29.95, okay? But if you want to get that special $14.95, and if you call them, I believe they may even be able to work with that price with you on that as well. But you have to call or email them. Here's where you can contact Pro Trader Strategies. There's their email address, trading@protraderstrategies.com, or probably better to talk to one of their trading consultants at area code 310-598-6677. Now, if you want to get the full lifetime access for $29.95, that link at the very bottom there is what you would simply copy and paste onto your browser. It's not a live link, but that's the link you would use. But I would suggest to get that great discount, because it's only going to be for a limited time only, and you have to contact them, I would suggest calling them directly at the phone number. Okay. Now I'm going to answer all your questions now. I'll leave this information up as I open up the question and answer box. And I want to thank you all for holding off on any questions and waiting and letting me go through the entire presentation. Okay. Okay, Gordon asks, with your rules, why do you need the Pet D? Well, that's a good question. See, the Pet D is almost like it ramps up your odds for success, because, with the strategy, let's say you had strategy number 5. Well, that's a very consistent strategy, okay? And even though we don't have statistics on it, let's say you would have a certain level of consistency trading that. We feel that by adding the Pet D, you will increase those odds substantially. In fact, we've seen it. You can go to the Pro Trader Strategies website or my website, see all the testimonials for people who have increased their odds tremendously simply by adding the Pet D. So a lot of people will start out with purchasing maybe a strategy of ours, such as strategy number 5, and they'll do fine. And they'll say, boy, for the first time, I'm doing pretty good. I'm having consistent trades. When we suggest ramping that up with the Pet D, they say, boy, why didn't I do this earlier? Now it's even better. And the beauty is the Pet D can be used a number of different ways. So it's an entirely different course as well. It's not just something that can be used with strategies. We have different techniques that you can apply using the Pet D by itself. So there's lots of different ways to use the Pet D. It's not just something that complements a strategy. It's also a trend identifier. It can also have its own type of pullback setups, as well as short-term trading setup. So there's a lot of different ways. It's a fantastic technique that I've been using for close to 40 years now, and I wouldn't trade without it. Okay. Gordon says, but the dojis are in neutral color. Actually, they're not. If you look at the dojis, they were initially in neutral color, but then when we added the Pet D, they will be colored either green or red. Okay. So that's what the Pet D does. Okay. Tony asks, can you show real life examples? Unfortunately, Tony, this is a static PowerPoint presentation. We don't have access to real time charts right now. If you like some, you can contact Pro Trader Strategies. They may be able to furnish you with something real time there. Okay. But remember, if you want to take advantage of that deal, you have to contact them, call them, or email them. All right. Stops. Yes. People are asking about stops. Obviously, you need stops. It's just that's part of the course. In other words, we just gave you an appetizer right now, but we can't give you the full meal. That would be as if you walked into a restaurant and the owner gave you a great appetizer and then you said, can I have the meal for free too? Well, we can't, we're just doing this on good faith to show you that we're trying to really educate you and teach you. I mean, if you wanted to right now, you could by all means use this method by any standard and generic way of discerning what the trend is, and then just look for dojis in that direction. And I think you would do okay. But why just do okay when you can really be consistent? And that's why we say this is, take our great offer we have, this great attendee discount, and apply it not only with dojis, but with other candlestick patterns, with other setups, with other ways in which to use the Pet D, along with 40 years experience as your mentor. I mean, that's something that, I don't really think you can purchase for just, a small discount like that. Rob asks, are we allowed to ask how the Pet D is calculated? Yes, Rob, you are allowed to ask, but unfortunately we can't answer that because it is in-house. We're keeping it in-house. Right now, the Pet D is just simply proprietary. It's a formula that needs to be calculated. It by no means is super difficult, but it does take time. And because of its, the power involved in it and how we want to apply it, we've decided to keep it in-house. Also, we have had a lot of offers from hedge funds that want to purchase it or to lease it out. So we don't want to just simply make it, give it away to everyone and they'll just start using it on their own. I can tell you one thing. I've seen so many on the internet and all these chat sites and people who in their total belief think that they have figured out what the Pet D is, and I can honestly say not one of them has the correct calculation. I've seen everything from moving average crossover to different oscillators combined together to simply, it's the phases of the moon. It's really silly. It's a formula that has to be calculated, and not anything I've seen on the internet is real. But here's the one thing I have to state. Even if we did give it away, the power in the Pet D is not in knowing the formula, because if I gave it away, I guarantee you the majority of all traders would lose money, because the power and the secret to the Pet D is not knowing what the formula is. The power is in knowing how to apply it. That's where the real secret is. And so many traders think, well, if I had it, I'd make $1 million. Well, yeah, you'd probably use it incorrectly and you'd want to throw it out the window. That's the way most traders would. They'd want to pick tops and bottoms. They would want to use it for something entirely different. And that's not the way the Pet D is meant to be used. I know how to use it because I've been using it for almost 4 decades now. So that's the beauty. You're getting 40 years of experience of someone who has applied this, who applies it on a daily basis, and who can show you the right way. That's the secret and the power of the Pet D, not in the formula, okay? Majid is asking, how about a 1-minute E-mini? Is it logical? Sure. I mean, in fact, you can use it on a 1-minute time frame. It's all depending, once again, on how you want to apply it. And I teach you that. I can show you. I made up a couple of charts for a student, a couple of time frames that were, one was a 1 minute, and there were a number of signals that could be set up in that. But it all depends on how you want to use it. One of the things I state is it's not a strategy. Most traders would say, oh my God, this is amazing. So whenever it's red, I'll just sell. Whenever it's green, I'll just buy. And that is probably the worst way in which to apply it, because that would be like, every time the a 20-period moving average is rising, you're just going to buy the stock. And every time it starts to go lower, you sell it. And you know as well as I do that wouldn't make any money. It's just a lagging tool. It's just not designed for that. And it's the same way with the Pet D. So most people would want to apply it that way. It doesn't work that way. Okay. But if you know how to apply it correctly, yes, you can use it with 1 minute time frame. Just making sure that you apply the rules correctly. Gordon is asking if he just wants to purchase the Pet D, if you already have purchased another strategy or already have strategy 5. Yes, that's why we always say contact Pro Trader Strategies. They handle all that. They're all in charge of sales and of discounts, so they would be the ones to talk. And I'm sure they can set you up with a good deal of that. Okay. Majid asks, do you consider price action in the Pet D? Yes, but it's a formula. Remember, it's not just based off of price action, but it's translating what the market wants to do. That's the best I can tell you. It's translating what the market wants to do at that given moment. And that's it. Okay. George says, I came in 10 minutes late to the session. Will this be recorded? Yes, it will be. Pro Trader Strategies has a recording of this. So simply contact them. They'll send you a link. But remember, if you want to take advantage of that great discount of only $14.95 plus $97 a month, you have to contact Pro Trader Strategies. You can't just go to the link. You have to email them or call them up. And the best thing would be, there's no obligation, required. You can just call the trading consultants there, and they would be happy to give you more information and work with you, okay, or answer any other questions that you may have. Remember, the link at the very bottom of the screen takes you for more information, but also is the $29.95 offer, the lifetime access. So if you're already set, say you already have another strategy of ours and you're set, you say, no, I know how well this is, I just want to get that lifetime access, then by all means use that link and it will automatically take you there. If you'd like to get that special $14.95 deal with a small, with a one-time payment and a small $97 a month payment, please contact Pro Trader Strategies, call them directly or email them, and that's how you can get that special deal, okay? Now, in closing, I want to thank you so much, but remember, we're coming to the end of the year, or I should say, we're coming to the beginning of a new year. Everyone's going to make new resolutions, new ways in which to make money, and the majority of traders will not reach those. In fact, you'll know by the first quarter that there's no way you're going to reach them, all right? And I'm not saying that to be arrogant or condescending. I'm saying that because I was there. I know exactly what that's like. It's very discouraging, very depressing. So if you're really interested in taking your trading to the next level, of being a consistent trader, we can help. All right, that's what we're here for. We are not promising some full-fledged system that generates thousands of dollars a day. We don't believe in that. In fact, if anyone says that, we think you should run, because that's a recipe for disaster. All I can promise you is my attention to detail and trying to teach you, and that I'll be with you every step of the way, and so that you understand it and we can mold something that fits your trading style, okay? You're going to get sound fundamental education that I continue to use and that has stood the test of time for roughly about 40, 50 years. So I want to thank you in closing. Thank you so much for attending today. I really look forward to having you become students and members of the Candlestick Combo, but most especially to being students of mine at Specialist Trading, all right? Thank you so much. I wish you happy holidays and a happy new year, and we'll see you next time. Bye-bye.